Hey, it's Ryan from the Option Income Advisor, and this is the trade of the day for July 19th, 2021. And we got another dividend stock for you guys today, and this will be kind of part of our top dividend stock series. But you can see here we're talking about Cisco Systems. This is kind of the old tech name. It's a name that, and I'll show you in the chart, it's actually kind of gone counter to what the whole tech sector has done kind of since the pandemic. We'll kind of walk through why, but we always want to have our long-term thesis in place, right? It's got to be a stock that we want to own. It's got to be a stock that has, some kind of tailwinds behind it, or at least a stock that, we feel is going to maintain, its current level, right? We want that balance where, we've got some margin of safety, by selling the put, but we also want to make sure it's a stock that we don't think is going to go much below, our strike price, and, having some tailwinds behind it, even if the stock doesn't go up, a lot of times, just the strength of the business itself, will keep, that stock stable over time. So that's kind of what we're looking for, especially with, markets at, all-time highs. You kind of want to look at those stocks that, trade okay from a valuation standpoint, but certainly have, some structure there, some business, fundamentals that we think will hold up and, keep the stock from kind of falling off the face of the earth, if you will. So looking at the rankings, so you can see Cisco ranks above average, or at least average on kind of our three main metrics here: dividend, safety, and value. Right, we've got a 5 for dividends, a 7 for safety, and a 5 for value. And we'll kind of walk through that. But one other thing we see here that we haven't seen on some of these stocks is we've got a momentum rating of 8. So I always like this balance where I can find a stock that maybe has some momentum, but is actually still trading at an okay valuation, and that's kind of what we see here. And so we're looking at a strike zone of 46 to 50. You can see the stocks trading right around 54. And last week was kind of a down week. We started getting some of that sell-off pressure, but you can see Cisco actually held up pretty well on Friday, which was good, right? And so what's affecting the strike zone? Our minimum required margin of safety right now for this stock is about 7.5%. And what's driving that is our strike zone factors here. So from a volatility risk standpoint, Cisco's one that historically hasn't been very volatile. You can see their mean implied volatility is only 24%, which is pretty low. And that's something you'll see a lot with our dividend stocks. And you'll see we won't get as big of a premium per se, but what we've shown you just in the last couple weeks, right? We're trying to mix in some of these dividend stocks that maybe are lower volatility with some of these growth stocks that are higher volatility, and kind of show you that you can find a good cash secured put, for both types of stocks. You just got to adjust for the volatility and factor that into your required margin of safety. But we already do that for you, on the website here, right? We give you a strike zone for each one, and it has dynamically kind of already adjusted for some of these factors, right? And then pullback indicator. Again, the theory here is that if a stock has already pulled back quite a bit, you need less of a margin of safety. If it hasn't pulled back very much, you would require a little bit more margin of safety. And so this one is a little bit different than ones we've looked at recently, right? We've looked at ones that have pulled back significantly. Well, this one, we're kind of not, we're approaching kind of new highs again. So we're only about 3% off our high. And so this pullback indicator is a 2, meaning it's, again, hovering close to a high, which means, there's probably some room to pull back if it does. But I think there's some factors here that may not cause that to be the case. And then we do have earnings coming up in the next 30 days. Again, that's already reflected in the margin of safety here. So we got you covered from that standpoint. So let's take a look at the chart and kind of what is wanted to talk to you about. So you can see just interesting dynamic with this stock, and it certainly played out. Again, hindsight's always 20/20, but you can, reading a chart is almost like reading a book, right? You can kind of as long as you can kind of pinpoint some reasons behind, some of the moves, you can kind of get behind whether or not maybe the trend's going to continue. But I would say just from a short-term perspective, we crossed the 50-day, crossed the 200-day, kind of earlier this year, and so we're looking at certainly a short-term uptrend right now. I mean, you can see, the expansion between the 50-day and 200-day, which is the blue line here is the 50, and the 200 is the slower moving average down below there. And anytime the faster, goes over the slower one, it certainly signifies an uptrend. So that's the first thing, right? We're in an uptrend with this stock, but you can kind of see what happened, right? Initial sell-off with COVID, just like everything else. Kind of bounced back as we were trying to figure COVID out, but you can see what happened here is counterintuitive to what was going on with the rest of the tech sector, right? The rest of the tech sector back, the end of 2020 was like this, right? Shot straight up, did pull back here in, February, March, when we had that kind of growth scare, where, interest rates are starting to rise. And we did get a little sell off here. But you can see Cisco had a huge sell-off, okay? And so this was really, Cisco's been pretty stable, and we'll kind of see in the sales and EPS here in a second. We'll look at it. But, what happened here was we had multiple things with kind of China, which was hurting their China sales. China's a big market for them. And so we had a trade war going on. And then I think it came to realization that, look, what has COVID done? It's changed, how we work and how, companies have really handled their upgrade cycles, right? So Cisco certainly was hurting from that standpoint, that people or companies weren't upgrading their networks, right? Cisco's the largest player or manufacturer of network routers and switches. So, really cyclical from the standpoint of, that IT spend where you're upgrading your networks constantly and things like that, just was not happening, right? And so, big sell-off. There were some earnings announcements there where they kind of talked about this, and, the stock literally almost went down to the pandemic low. And then we started kind of late last year, and then this year, it's kind of almost bucked the trend of the overall tech sell-off, right? It got some stability there, started to rise, and then sold off a little bit, during February, March when all the other tech stocks sold off. But then it's kind of continued its rise, and so you can see what I've got here. This dotted red line, signifies this level that it was at, couldn't break through. Again, kind of early 2021, you can see that it tried to break through, but that's right kind of when that tech scare was hitting, and so kind of a failed breakout, if you will, right? So that dotted line is kind of a breakout. But then you can see in March, we did break out, so kind of above this green line, and it's been kind of up and away ever since. And so I like to see that in a chart. I think this breakout now is real. And so what I would be looking at from a pullback perspective is that this level that it broke out from before is that level that holds, right? So that's right around a 49 level. And so as we're looking at our cash secured puts, that's the level we want to kind of look at, right? We want to look at that level to say, typically what happens when you have a strong breakout like that, when you do have a pullback, that initial breakout level is certainly one that holds. So that is something to keep on our radar. So again, that's right in our strike zone of 46 to 50. So let's take a look. Dividend, again, this is part of our dividend series. So, this pays almost a 3% dividend. So, while we wait, for this stock to potentially go up, right, we're gonna collect, our cash secured put premium, and you'll see in this case we can get about 3 times what we would normally get with the dividend yield with this stock. And if we do get filled, it's a low volatility stock, so we're not going to have much from a margin of safety, But what I love about these dividend stocks is they are low volatility, and if we do get stuck, we do get to collect that dividend. And this one's pretty nice, around a 3%. And so let's take a look at the sales and EPS is what I was talking about. I mean, this is about as stable as it comes. I mean, you can see it's not a high growth business by any means, but you can just see how stable just sales have been. Even during the pandemic, I mean, you can see earnings were pretty stable, and earnings have actually picked up quite a bit just in the last year. This is the green is the projected for 2021, so you can see they're projected to earn $3 a share, over $3 a share, and that really helps from a valuation perspective too, as we see this earning lines kind of go up. But you can see just how stable the sales are, and it shows in the quarterly too. So this is just a very, very stable business, and what I like to see here, and that's why we have a safety rating of 7, is you can kind of see earnings just the last 4 quarters kind of pick up. So again, it's got some, I think, earnings momentum. I think what's driving that, right, is that Cisco has a security business too. So not only do we have this kind of upgrade cycle now with, I think, networks, and then that's going to be a tailwind. You also have just fear in general out there of like cybersecurity and things like that. And Cisco does have a big security business, or a growing security business. So I think those two factors, where you've got this network upgrade plus the security side of it, I think is a really good recipe for at least the next couple of years and just some stability. And so it's trading at a decent valuation already. It's got some momentum, and I think the reasonings behind that kind of make sense. So again, the long-term thesis kind of holds. Okay, so short-term, again, we talked about that 49 to 50 level, kind of being that level that will probably hold. So let's take a look at the puts. And again, the website Option Income Advisor has all of these, cash secured put analysis, within the stock profile. So anytime you log in here, you can see, exactly what the strike zone is for each stock, and then you can see whether or not there's a cash secured put that makes sense. And so we're going to look at this. We're still looking at August, and again, these dividend stocks, they do pay. The premiums are lower, just how it is, right? So I always accept a little bit less on our premium for a stock like this, just because I know it's going to be a lot more stable than some other stocks that we could potentially get into. So I'll accept something just below 1%. And so where we're at right here, this 50 level, we've got 0.8%. But it is a delta below 20, which is great. So from a risk reward standpoint, I like that risk reward. So we're accepting a little bit less risk, a little bit less reward, but we do have, again, a delta under 20. We've got a 7% margin of safety. It is in our strike zone. We do have EPS risk, but again, I think just what's happened with this company over the last few quarters, I kind of like the earnings momentum and kind of where they are, kind of almost in a turnaround position, right? Where I think we're going to get some network upgrades, and I think we're going to see that probably in the earnings report. So that would be our base. Again, just under our 1%, but I think that's just a good balance we've got there. Conservative would be this 49. It gives us about 0.6%. A little bit more margin of safety, and again, delta under 15, which is nice. And then from a aggressive standpoint, if we want to get aggressive with this one, this 52.5 doesn't give us much of a margin of safety, but it does give us almost 2% average monthly yield. Again, that's kind of what we look for that aggressive standpoint. And again, you'd go after the aggressive one, obviously, if you felt as though, hey, this is a good stock at this price. I'd be happy to buy it, just below where it's trading, obviously, which is right around 54. So you'd be okay with the 52.5, and that's got some of the most of these aggressive plays will have a delta around 30 or just above, and that's kind of where this one's at right now as well. So That's our play for Cisco. Again, these are our aggressive base and conservative cash secured puts for Cisco. And again, I think it's a good dividend stock with some good kind of momentum behind it. Again, if you haven't checked out Option Income Advisor, definitely do that. There's some great tools on here, great watch lists, screeners, things to help you find good opportunities. And then once you find one, obviously you can see that you can analyze the cash secured puts very quickly. So that's all I have. Let us know if you have any questions.